Hey, class, how's it going today? Just wanted to give you guys a quick market update for the week. Today, it's Wednesday. U.S. equities started slightly down earlier. This was based on hotter than expected CPI data. So we saw inflation come in hotter than expected, and that is putting a little bit of pressure today on the stock market. This comes after U.S. equities finished lower on Tuesday, with the S&P snapping an 8-day winning streak and the longest streak of record closes of all-time highs since 1997. Growth was a notable laggard to value, so stocks that paid a dividend have tended to do better than stocks that don't the last few days. One item here that is to note, bank stocks usually do better when interest rates are going up. Banks typically pay dividends. Banks are typically considered a value stock because of these factors. Banks benefit from higher rates because they make a greater amount of money on the interest spread, which is the money they pay you versus the money you pay them via a mortgage. This is important to think about why value is done better. If inflation is higher than expected, that also means, or could mean, if it persists, that the Fed may raise rates faster than expected. Maybe bank stocks continue to outperform. The consumer is still strong. There's little risk of bankruptcy, broadly speaking, compared to like an 07 or 08. Healthcare also held up well yesterday. October CPI again came in hotter than expected, came in at around a year-over-year increase of 6.2% in prices, which sounds like a lot. However, where were we coming from, and where we were at that point was a pretty low point in terms of gas prices, travel, airlines, et cetera, et cetera. Anything else there I might want to mention? Initial jobless claims have hit another new pandemic low. So not a lot of people are filing for unemployment. That's really about it on that side of things. There's a IPO today from a company called Rivian, another electric car maker. It seems like we're on the verge of a glut of electric car makers. One thing I don't know if I've discussed in greater detail is that the beauty of the electric car business is that it's significantly cheaper to bring a car to market than with a traditional engine because of the complexities of an engine versus the simplicity of a battery and a motor. Now, this Rivian IPO is coming out with huge fanfare. However, I've never seen one. I've never seen anyone buy one. I've never seen one on the road. Could it be the next big thing? Maybe. But between Tesla, which already exists, and about another half dozen other electric vehicle makers that are essentially vaporware, meaning they don't exist, why do I believe that they're going to not only be able to execute faster and with more resources than a company like Ford? To me, it seems like a great time to raise money if you're an electrical vehicle maker, because they can effectively sell high. So those are pretty much my thoughts for the day. Just one more thing, General Electric, one of America's oldest companies, split into 3 separate companies, or will be doing so. So that's, an interesting corporate restructure. And really that's effectively it. So I hope you guys have a wonderful day, and I'm looking forward to seeing your comments below. Thanks.